I want to believe you all received uh, the additional notes which I've shared with you on the relevant costing, the solution to some other questions that we did not solve in class. Please do best to review them and then so that you have more understanding of the topic. All right. Then uh, towards the end of last class, I introduced you to, please mute yourself. I introduced you to short-term decisions, and we said that short-term decisions uh, represent the application of marginal costing technique to analyze a particular course of action in making managerial decision. And we said that uh, whatever decision that is to be taken under short term will have to be critically examined in two perspectives. We talk about economic perspective. We also talk about the qualitative perspective. We said the economic perspective is the process of determining the economic viability of the course of action, whether it will result into profits or loss, savings or deficits, or contribution to the organization. And we also said that the non-quantifiable factor or perspective are those factors that cannot be expressed in monetary terms. Okay, they are the factors that cannot be that are not quantifiable. Okay, so in that case, we also said that whenever you want to make a decision or whenever because your responsibility as a management accountant is to assist management in making informed business and investing decisions. All right. So the quality of the decision that is to be taken is very important because it has far-reaching effects on the company's success in the marketplace. Not only that, because bad decision has the capability to resort to financial losses to the organization. Not only that, it can also erode the reputation of the organization. All right. So in order to guide against that, that's why it is important whenever there is need to make managerial decision or to make a decision, it is important you as a management accountant to allow a designated decision maker to make the final decision, even though you are part of the process, but allow others, the decision makers, to make the final decision, because any wrong decision being made can have can erode your integrity, you as a management accountant. Not only that, the entire body, the entire blame may be pushed to you. And that's why it is important for you to allow other decision maker, because you can't be the one that will do the analysis. You are the one that will do the recommendation. You also be the one that will make the decision. It shouldn't be. So you are there as a management accountant to recommend, to suggest, to advise the management on what needs to be done. All right. So that is what we discussed last time. Of course, today we also talk about last time we also talked about the areas of the application of marginal costing concept in decision making. We said the management uh, the marginal costing concept can be used or can be applied in the areas of discontinuance of a segment, make or buy decision, acceptance or rejection of a special order, uh, shutdown of capacity, adding of a new segment, optimal product mix, linear programming, cost volume profit analysis. So this is where we stopped last time. Today, by the grace of God, we are going to continue we are going to pick the areas one after the other. I will explain the principle, then we'll solve illustrations. Then once we are done with that, we'll pick another one. So we are starting with discontinuance of a segment. Let me share my screen with you. Let me know if you can see my screen.
Yes, sir, we can see it.
All right, thank you. Okay. I want to believe all of you have access to this material. Please open it to open the material and so that you can follow together. So we are going to start from deleting of a segment. Okay. Now, one thing you need to understand is that when it has to do with deleting of a segment, when a particular segment is operating at a loss, management may be contemplating on discontinuing the segment. The segment can include a product, a type of customer, a geographical location or distribution. All right. So when a particular segment is operating at a loss, management will be thinking of dropping that segment because it's generating loss. No company will appreciate the fact that a business segment is generating loss or is contributing loss to the organization. So when this kind of a decision happens, so there will be need, when management is contemplating on doing that, there will be need for that particular segment to be analyzed critically using the economic angle as well as the qualitative factors that affect that particular segment, so that at the end of the day, you'll be able to make informed business decision. So, like I said, the only thing that will make management to be contemplating on whether a segment should be discontinued or not is if that segment is operating at a loss. The reason why I'm saying this is the fact that at times examiner may give you a question and the profit or loss or the income statement may not be given to you. You are just going to be given raw data. And then, of course, they will now ask you to advise whether the company should discontinue the product or the segments or not. So because you don't have income statement, there's no way you'll be able to know whether there is profit or loss. And that's what I'm emphasizing on this, that the only reason that we make management to be thinking of closing down a particular segment is because that segment is operating at a loss. I believe that is taken. Now, again, don't forget what I said earlier. Whatever decision that is to be taken under short term will be critically examined in two perspectives: economic perspective as well as the qualitative perspective. The economic perspective represents the process of determining the economic and financial viability of the affected segments, whether it will result in positive or negative contribution to the organization using contribution margin statement approach, okay, or income statements. I will repeat, the economic angle represents the process of analyzing or determining the economic and financial viability of the affected segment, whether it will result into positive or negative contribution to the organization using contribution margin statements approach or income statements. Okay, so by so doing, for you to be able to determine your when you want to carry out your economic analysis, there is a format that you need to do, because in determining your economic perspective to know whether you are going to achieve positive contribution or negative contribution, you need to compare the sales value versus the relevant cost of making the product or the segments. All right. So the difference between the sales value and relevant cost of making the product or the segments will give you either positive or negative contribution. So to achieve your economic analysis, you are going to use these formats. You compare your sales value. You compare your sales value with the relevant cost of making the segment. So to get your relevant cost, you are going to account for the direct material the same way you calculated your direct material cost under operating statement when you multiply the direct material cost per unit with the number of units produced and all of that. But in mostly under this topic, the direct material cost will be given to you directly. So there may not be need for you to multiply material per unit with the units produced. All right. So you add up all the direct material, direct labor costs, direct expenses, variable parts of production. If you have any opportunity cost, you also include it because opportunity cost is also part of relevant cost. Then you are going to include direct, specific, attributable, or incremental fixed cost. Provided the fixed cost is relevant, you have to also include it as part of your relevant cost. So you total all the relevant costs. So the difference between the sales value and the total relevant cost will give you either positive or negative contribution. Now, at this point, you need to make a decision. You need to make a decision rule whereby where you're going to advise the management. So if the difference between sales value and relevant cost of making the segments result into positive contribution, your advice should be that the segment should not be deleted. Okay? If positive contribution, the segment should not be deleted because the segment is actually contributing positively towards the recovery of the company general fixed overhead and net profits. I will repeat again. If your economic analysis results in positive contribution, your advice should be that the segment should not be deleted because it is actually contributing positively towards the recovery of the company's general fixed overhead and then net profits. However, if the difference between the sales value and the relevant cost gives a negative contribution, then your advice should be that the segment should be deleted. The segment should be deleted because the negative contribution will lower the net profits. Okay, negative contribution will generally lower the net profit. So if that segment is deleted because it's generating negative contribution, if it is deleted, then this will now improve or enhance the overall performance of the company. That is, the net profit of the company will then increase. All right. So I repeat again, where there is negative contribution, your advice should be that the segment should be deleted because this will then increase the overall net profit of the organization. The third one, in a situation whereby the sales value and the total relevant cost of the segment equal, then you have the option to either delete the segments or not delete the segments, depending on other qualitative factors. I repeat, where there is zero contribution, that is where your total sales value equal total relevant cost, then we can either delete the segments or we do not delete it, depending on other qualitative factors. All right. So those are the things you need to do under deleting of a segment. Once you can see in a question whereby examiner is asking you under the requirement, should the company drop the sale of so much of the segment, or you are asked, should the company discontinue the sale of the product, or you are asked, should the company delete the production of the segment. Once you hear such a thing, you should know that this question belongs to deleting of a segment. Okay, so under deleting of a segment, all you need to, the most important thing to do is to compare the sales value versus the relevant cost of making the segment, whether it will result in positive or negative contribution. All right. So those are the things you need to do under deleting of a segment. Remember what I said earlier on, whatever decision that you are going to take under short terms must be critically examined into perspective, economic perspective, and also qualitative factor. We just talked about the economic perspective. Let us discuss the qualitative perspective of the decision. Now, you know, there are several factors you need to consider when it comes to deleting of a segment. There are several factors you need to consider. One is the fact that deleting of a segment have something to do with performance of the organization, because the essence of what we are discussing is to help the company to do well in the marketplace. All right, to help the company to do well in the marketplace, because every company wants to create value. Every management of a company wants to create value for the business in order to enhance the owner's equity value, Therefore, the fact that you have economically analyzed the situation is not sufficient for you to make the final decision without considering the economic angle of the decision that is to be taken. So without considering the qualitative factor, in addition to the economic analysis that you have carried out. So what this means is that for you to be able to make the final decision, you need to critically examine the qualitative factor that you are going to consider. One factor that you need to talk about under deleting of a segment is the impact of the closure decision on the overall turnover of the organization, especially where the targeted segment is jointly demanded with the company's other products. I repeat, one of the qualitative factors that is associated with deleting of a segment that the management of the company will need to consider is number one, the impacts of the closure decision on the company's overall turnover, especially where the targeted segments that is to be deleted is jointly demanded with the company's other products. So that is one factor you need to consider. When you talk about joint demand are products that must be used together. All right. Say, for example, marker and board. Board will be useless without marker. Marker will also be useless without board. Okay, those are joint demand. All right. So, because if a customer wants to buy, the customer will usually buy the two together. But now that you are only producing one, certainly the company will lose revenue. Your customer will surely go to your competitor that can deliver the two products at the same time. And that's why you need to consider that factor before the final decision is taken. The second point under qualitative factor is the effect of the closure decision on the company's reputation. All right. How would the closure decision affect the company's reputation? So you need to consider that before the final decision is taken. Then number three, you may also want to consider the perspective of the company's shareholders on the closure decision. You never can tell. It may well be that it's one of the shareholders that introduced the product or the segment. Now that your management is contemplating on discontinue that segment, certainly there may be some kind of organizational politics, so it may create some kind of bad blood. And that's why it is important to consider the perspective of the company shareholders before the final decision is taken. Effective communication is important in this kind of a situation, because once you relate to such individual, or you never can tell, even if the shareholder maybe is a shareholder that have significant influence in the organization. So all you need to do before final decision is taken, is to call on that individual, let him or her know the reason why the management is thinking in that direction. And of course, whatever decision that is to be taken must be in the best interest of the company. The interest of the company will supersede every individual interest. And then once you make that individual to understand, there will be nothing like bad blood. But if you think because you are management, you just take a unilateral decision without considering the interest or the concern of other stakeholders, that may impair the ability of the company to do well going forward. All right, because bad blood within an organization can limit the capacity of a company to achieve success in the marketplace. Then the next one is the reaction and the interpretation of the company's creditor to the decision to discontinue the segment. Okay, the management will need to consider the reaction and the interpretation of the company's creditors to the decision to discontinue the segment, because you have borrowed money. Say, for example, you have borrowed money to run that particular segment. Your creditors may want to know how you are going to pay back the loan that you have borrowed. All right. How would they react to that closure decision? So it is important. Again, effective communication also matter in this situation. Then the next one, you also need to consider the impact of the closure decision on workers' morale, especially as it relates to productivity. You know, when you are, say for example, you have products A, B, and C, you are now contemplating on discontinuing product B. You know, once you delete a particular segment, certainly it will bring about it will lower productivity, because the workers' morale will be very low. The workers' morale will be very low. Other employees or other workers that are operating on products A and C may become agitated. They will be concerned that, oh, today we are laying off, because once you delete a particular segment, the staff that are working on that particular segment will be affected. All right. So as a result, the other staff that are working on other products, the staff that are working on other products may become agitated. They will be concerned that, hey, today we ask these people to go. It's possible tomorrow they may ask us to go. As a result, their morale is low. So once morale is low, it will also lower productivity. It will also lower productivity. And that's why it is important to consider the impact of the closure decision on workers' morale. All right. Then let me just add one more. Now, if the segment is eventually discontinued, then you need to ask, how would the company manage the negativities that will arise from the closure decision, especially litigation from, as well as the compensation to the affected workers? You know, so there, if the company decides to delete that particular product or segment, there may be some level of negativity that will arise, especially the union, the workers' union. They may decide to file a case against the company, you know, and every company wants to avoid anything that will erode their image. Okay, that will erode their image. And then even if there's nothing like litigation, there may be compensation that is to be paid, or that will be paid to those workers, to the affected workers. So the company will also need to consider whether they have the financial capacity to pay those workers that are affected. So these are some of the factors you need to consider in relation to deleting of a segment. So right now, we have discussed the economic angle. We have discussed the economic angle. We've also talked about the qualitative factors. We've also talked about the qualitative factors. So at this point, let's go for illustrations. So I want to hear from you. Do you have any question for me so far before we move on to illustration? So in the absence of no question, let's go ahead. Let me see. We can solve more than 2 illustrations. So let me see which one. Okay, let's do it this way. Let me see. This one does not have income statement. So let's start the one that is very clear. Let's start with that one. Illustration number 1. Please open to your material. Let's go through this illustration number 1 together. Let me see. Florence, are you on? Hello, Florence? Florence, are you online? Okay. Esther, are you on?
Yes, sir.
Okay, please, can you help us read this illustration number 1? Adigboluja.
Okay, sir. Adigboluja manufactures 3 brands of ice cream chocolate. Okay, ice cream. Chocolate, vanilla, and strawberry. The present net annual income from this is, we have the sales, the variable cost, the contribution, the fixed cost, the profit or loss, the total chocolate, vanilla, and strawberry. The company is concerned about its poor profit performance and is considering whether or not to cease selling vanilla. It is felt that selling prices cannot be raised or reduced without adversely affecting income. 5,000 naira of the fixed cost of vanilla are direct fixed costs, which would be saved if production ceased. All other fixed costs would remain the same. Required: A. Should the company drop the sales of vanilla? B. Suppose, however, it is possible to use the resources realized by stopping production of vanilla and switch to producing a new ice cream, which is banana, which would sell, or 50,000 naira. Is there any other thing? Or 50,000 naira.
For 50,000, that's a typo there. Yeah.
Okay, and incur variable cost of 30,000 naira, and extra direct fixed cost of 6,000 naira. Will your earlier decision in A above remain the same? C. What are the non-quantifiable factors that the management of Adigboluja should consider?
Thank you very
Thank you.
much, Esther. You can mute yourself. Thank you. So in this requirements A, we are asked to advise whether the company should drop the sale of vanilla. So it is very clear from that requirement that this question relates to deleting of a segment. Therefore, what are you supposed to do under deleting of a segment? The most important thing to do is to compare the sales value of the affected segment with the relevant cost of making the segment, whether it will result into positive or negative contribution. That's all. So with this, I'll stop sharing this and switch to the working note. Okay, so the name of this company is, let me know if you can see my screen. Can you see my screen?
We can see your screen.
All
Yes,
right,
sir, we
thank
can
you.
see your screen.
All right, don't forget to mute. So the name of this company is Adigboluja. Okay. So examiner is asking us to advise whether the company should drop the sale of vanilla or not. So if that is the case, I need to prepare contribution margin, or I prepare income statement that will show the contribution for each, for vanilla. Now, one thing I need to re-emphasize is that when it comes to deleting of a segment, your focus is on the affected segment. You are less concerned with the profitable units, with the profitable segments. It is that affected segment that the management is thinking of closing down that you are going to concentrate on. You are less concerned with other ones that are profitable. So in this case, our focus will be on vanilla. We want to analyze the economic perspective of vanilla. Therefore, I would then say number A, contribution margin. I can say contribution margin or income statement. We want to use contribution margin statement. Okay. If you like, you can say contribution margin statement for vanilla. If you like, just put contribution margin statement and move on. All right. So don't forget, the essence of what we are doing is to determine contribution margin for the affected segment. Therefore, we are supposed to compare the sales value. So what's the sales value of vanilla, please? What's the sales value of vanilla?
40,000.
Pardon? 40,000 is the
40,000.
all right. So 40,000 is the sales value of vanilla. So I will come in and put 40,000. Okay. Then I will need to compare this with relevant costs of making vanilla. I will then go back to the question. To get my relevant costs, I need direct material, direct labor, direct expenses, variable overhead, any other costs that are relevant to the production of vanilla. I need to consider it. So in this question, we are given variable costs. Variable costs are direct, it's also called direct cost or marginal cost. So for vanilla, the variable cost is 25,000 naira. So I would say variable cost. $25,000. I will go back to the question if there are other relevant costs. According to the table given to us, we also have fixed costs. Remember, fixed cost is not a relevant cost. Fixed cost is not relevant except it is incremental in nature or specific to the segment. In this case, the 18,000 fixed cost is irrelevant. We ignore it. So move down to the additional information. We are told that the company is concerned about its poor profit performance and is considering whether or not to cease selling vanilla. It is felt that selling prices cannot be raised or reduced without adversely affecting income. 5,000 of the fixed costs of vanilla are direct fixed costs, which would be saved if production ceased. So this, what examiner is saying here is that out of the 18,000 naira for vanilla, out of the 18,000 naira fixed cost of vanilla, 5,000 naira of it is a direct fixed cost. So direct fixed cost is relevant. So we need to go and account for that. I would then say direct fixed cost. $5,000. I will go back to the question. What are other costs we have there that are relevant that relates to vanilla? All other costs, all other fixed costs will remain the same. So examiner has told us that based on the information we have, there is no other cost again. Therefore, I need to total that. I will add these two together. That will give me 30,000 naira. So 30,000 minus 40,000 will give me 10,000 naira. So this 10,000 naira represent positive contribution. Okay, so that's, and then in that requirement, examiner is asking us whether the company should drop the sales of vanilla. At this point, you need to advise. I would then say, Adigboluja should not drop the sales of vanilla because it is actually contributing positively towards the recovery of the company's general fixed overhead. Fixed overhead and net profits. So we are done with number A. We then move to number B, requirements. We are told in the B requirement that suppose, however, it is possible to use the resources realized by stopping the production of vanilla and switch to producing a new ice cream, banana, which we sell for 50,000 naira, and incur variable costs of 30,000 naira and extra direct fixed costs of 6,000 naira. Will your earlier decision in A above remain the same? So let's go to that B. Number B, requirements. The most important thing to do, the most important thing to do is to compare the contribution margin of producing vanilla with the contribution margin of producing banana. Any products, any of the two products, any of the two products that yield a higher contribution margin should be considered or undertaken. So at this point, we already have the positive contribution of vanilla. So we need to go and prepare the contribution of banana. Then we compare. So I would then say contribution margin statement for banana. The same way you calculated for vanilla. So sales value, we are told that banana will generate a sales value of 50,000 naira. Then we need to compare this with relevant costs of making banana. So we have a variable cost of 30,000 naira. And we also told that there's a direct fixed cost. There's a direct fixed cost of 6,000 naira. So when you add the two together, that gave 36,000. 36 minus 50,000 will give us 14,000. So we have positive contribution of 14,000 naira. So banana produced a positive contribution of 14,000 naira. Whereas, let me put it down. Banana produced a positive contribution of 14,000 naira. Whereas vanilla generated a positive contribution margin of 10,000 naira. Therefore, the company should switch resources to producing banana in order to earn additional profits or additional contribution, or profit of 4,000 naira. That is 14,000 naira minus 10,000 naira from vanilla. So that's that. So we are done with B. Let's go to C. So C is asking, what are the non-quantifiable factors? So you already have this one in your notes, all right? You already have this one in your notes, but let me just give you let me just solve this one, this number C, so that you, now, whenever you are asked to state your qualitative factor under deleting of a segment, not only under the deleting of a segment, everything you want to do under short-term decisions, please, your qualitative factor should not be generic. Don't make it too open. You have to make it specific to the question. Link your qualitative factor to the question. Relate it with the question. Don't make it too generic by copying or cramming what you have in your notes. On the day of your exam, what you have in your note is what you are putting down. It shouldn't be. So when you are stating your qualitative factors, you need to link it to the question. Okay? I think somebody is asking question. Please kindly clarify why variable cost is taken as relevant cost. Wow. Variable cost is a relevant cost because they are direct costs. When you want to produce any costs that are directly related to your production are variable costs. Examples of variable costs include direct material, direct labor, direct expenses, and variable overhead. Those are variable costs. If your examiner does not call it variable cost, it could also be called marginal cost or direct cost. Is it clear now? Harry?
It's clear now, sir. Thank you, sir.
You're welcome. Okay, so the number C, let's talk about the qualitative factor. Let's talk about the qualitative factor. Now, when you want to, like I was trying to say, when you want to state your qualitative factor, please, you have to link the non-quantifiable factor to the question, especially in this one. Okay, because of time, let me just quickly write it down. Let me write it down. Number C, qualitative factor. What is the examiner asking there first? What are the non-quantifiable factors? Okay. I would then say non-quantifiable factors. I can say Adigbolujá, should consider the following non-quantifiable factors before final decision is taken. So number one, let me write that final. So number one, what will be the effects of dropping the sales of vanilla on the customers? What will be the effects what will be the effects of dropping the sales of vanilla on the customers? Okay, what will be the effect of dropping the sales of vanilla on the customers? So you also need to ask, is there any possibility of loss of revenue due to low patronage by the customers as a direct consequence of the closure? Okay, is there any possibility of loss of revenue? Let's put it down. Is there any possibility of loss of revenue as a result of dropping the sales of vanilla? Okay, so of course, if you drop the sale of vanilla, it may result to low patronage by the customer, and as a result, revenue will also drop. All right. Then, secondly, after the closure of vanilla, you need to ask, would the affected workers be redeployed to working under maybe strawberry or uh, uh, what's the third one? Strawberry and let me see, chocolates. Yeah. So you need to ask that question because management must take a point on what they need to do, what they want to do with the affected workers. So after the closure of vanilla, would the affected workers be redeployed to working under strawberry or chocolate? Or would they be retrenched? So all these factors you need to consider before the final decision is taken. So let's put it down. Number 2, after the closure, after dropping the sale of vanilla, after dropping the sale of vanilla, after dropping the sale of vanilla, would the affected workers be redeployed would the affected workers be redeployed okay? Would the affected workers be redeployed uh, to working under chocolates or strawberry or be retrenched or retrenched? Okay, so you need to ask, after dropping the sales of vanilla, would the affected workers be redeployed to working under chocolate or strawberry, or are they going to be retrenched? So let's have maybe 2 more. Then number 3, you also need to consider, would there be additional cost to be incurred for training and retraining if the affected workers are eventually redeployed to working under strawberry or chocolate? So you need to ask, would there be additional cost to be incurred for training and retraining of the affected workers? So number 3, would there be any cost to be incurred? Would there be any cost to be incurred on training and retraining of the affected workers if they are eventually, if they are eventually redeployed. Okay, so these are some questions that the company management will need to answer. Okay, these are the questions company's management must provide an answer to. Okay, so let's have one more. Let's have one more. Okay, we can say, to what extent would dropping the sales of vanilla affect workers' morale? Okay, to what extent would dropping the sales of vanilla affect workers' morale? So let's ask that question. Number 4. Or you can say, what would be the impact of the closure decision on workers' morale? On workers' morale, especially if vanilla is jointly demanded with other products, with other companies' products like chocolates or strawberry. So I think we are good with this 4. So like you can add more from your material. But the most important thing is that you don't make your um qualitative factor to be so generic. You have to link it with the question, make it specific to the question. All right. So, and that's what we have done. So, let's move to another illustration. Now, before we move to another illustration, let me know if you have any question for me on this one we just solved. Do you have any question? Okay. So in the absence of no question, let's move to another illustration. Okay. All right. I will stop sharing this. Okay. Let's solve illustration number 2. Let me see who will read for us. Anthony, I need you to read for us illustration number 2, Ife Sinachi Limited. Anthony?
Okay, just 2 minutes.
Okay, thank you. You can go ahead.
So just hold on, I'm trying to get my earpiece. I'm actually charging it before my phone.
Oh,
I
okay.
have to replace it. My battery is almost out.
It's
Sorry.
okay. Let me look for another person while you are doing that.
I'm actually charging before. It's on speaker. That's why.
It's okay. Victor, please. Victor,
Yes, sir.
Please read illustration number 2.
Okay, sir.
Can you hear me?
I can hear you.
All right. If it's Nachi Limited making a single product, has a factory in Lagos and distribute the product through 3 depots in Lagos. Okay. Lagos, Benin, and Kaduna. It is estimated that during the coming year, 100,000 units will be manufactured and sold at a price of 20 naira per unit. The sales being spread as follows: Lagos, 70,000 units. Benin, 20,000 units. Kaduna, 10,000 units. Standard cost of production are direct material, 4.80 naira per unit. Direct wages, 3 naira per unit. Factory variable overhead, 140% of direct wages. Factory fixed overhead, 400,000 per annum. The cost of selling and distribution incurred by the depots are estimated as follows: Lagos, 80,000 per annum. Benin, 50,000 per annum. Kaduna, 30,000 per annum. Variable selling expenses: Lagos, 5% of sales value. Benin, 8% of sales value. Kaduna, 10% of sales value. From the budget for the business prepared from these periods, management is considering the desirability of closing the depots and selling organizations in Benin and Kaduna. If this is done, it's expected that all sales in these areas will be lost, but that sales in Lagos will remain unaffected. Required: prepare a budget for the business from the figures provided, indicating why management is thinking of closing the depots in Benin and Kaduna. B. We draft the statement prepared above using contribution margin approach. C. Prepare a statement using the historical approach to show the net profit of the organization after closing down the 2 depots. Advise the management based on the income statement prepared above.
Thank you very much. That's it. That's the question. Thank you once again, Victor. So now you can see from this requirement that examiner is asking you to prepare a budget for the business from the figures provided, indicating why management is thinking of closing the depots in Benin and Kaduna. You can see in the first illustration that we had, examiner gave to us income statement. You were able to see that Vanilla was having a loss, contributing loss as a profit. Contributing loss to the total profit of the organization. So as a result, management is thinking of closing down Vanilla. But in this question, under Ifesinachi Limited, management is thinking of dropping Benin and Kaduna depot, but we don't know the reason why. And that is why examiner is asking you in the A part that you should prepare a budget statement for the business from the figure provided, indicating why management is thinking of closing down Benin and Kaduna depot. So to solve this question, the first thing you need to do is to prepare your income statement. You know how to do your income statement like the same way we did under operating statement, okay? So to get your income statement, in this case, you are going to do for all the depots, Lagos, Benin, and Kaduna, because you don't know which is which. You don't know which one is, even though management is contemplating of closing Benin and Kaduna depot, but you don't know the reason why, okay? You don't know the reason why, and that's why it is important for you to prepare your income statement that will show profit or loss. So I will stop sharing this and then switch straight to the working notes. All right, let's move to the working notes. Let me know if you can see my screen. Can you see my screen, please?
Yes, sir.
All right, then. Thank you.
Yes.
All right, thank you. So illustration number 2. Solution to illustration number 2. Ife Sinachi. The name of the company is Ife Sinachi Limited. So, examiner is asking us in the A part to prepare budget statements and indicate why management is thinking of closing down Benin and Kaduna Depot. I would then say, please don't get confused. If you are asked to prepare budget statements, because you may be thinking, what is budget statement? Budget statement is the same thing as income statement. It's the same thing as contribution margin. It's the same thing as a historical statement. It's the same thing as operating statement. So examiner can call it anything. What is important is that you want to prepare profit or loss. Okay? So I would then say budget statements. All right. There are 3 depots. We have Lagos, Benin, Kaduna. Then, okay, let me adjust a little bit. Lagos, Benin, Kaduna. Then you need to have a column for the entire organization. So we have total. Activity level. That will be driving sales and production. Examiner told us in the question that, let's go back to the question together. In the first paragraph, we are told that it is estimated that during the coming year, 100,000 units will be manufactured and sold at a price of 20 naira per unit. The sales being spread as follows: 70,000 units for Lagos, 20,000 units for Benin, then 10,000 units for Kaduna. It's not compulsory that you must indicate the activity level, because on the day of your exams, you don't really have much time. So you need to focus on something that will enhance your performance. So anything that is like putting number of units is something you can see it in the question. So no need for you to be putting it down. In fact, let me remove the activity level. Then I will come here. I can restrict my number to thousands. Okay, that will also save my time. Then I can draw down. Before I draw down, I need to know the extent of my table. So I want to determine sales value. Remember, when you want to prepare your income statements, you want to determine net profit or loss, we are starting from sales value. So to get my sales value, I'll bring out my calculator. All right. Selling price per unit is 20 naira. I will say 20 naira multiplied by number of units sold in Lagos. Lagos, we sold 70,000. So that's 1,400. Here is 1,400. In Benin, we sold 20,000 units. So 20,000 units multiplied by 20 naira will give us 400,000. In Kaduna, we sold 10,000 units at 20 naira per unit, which is 200,000. 1,000. So that will give us 2,000. Then I need to determine relevant costs. Okay, I want to determine relevant costs. I will then go back to the question. Do I have direct material? Yes, that's a direct material. So I will need to accumulate all the variable costs. So we are given direct material, direct wages, factory variable overhead. So let us go and account for that. And then direct material per unit is 4 naira 80 kobo. So I will then say direct material. Let me shorten it. Direct material. 4 naira 80 kobo multiplied by 70,000 units. 4.8 multiplied by 70 equal 336. Here is 336. 4.8 multiplied by 20 equal 96. 4.8 multiplied by 10, that will be 48. 4.8 multiplied by 100, that will be 480. Okay. Of course, these are costs. It has to be in parentheses. I will go back to the question. Am I given direct labor? Yes, there is direct wages of 3 naira per unit. So direct wages, 3 naira per unit. So 3 multiplied by 70,000 units. That will be 3 multiplied by 20,000 units will give me 60. 3 multiplied by 10,000 units will give me 30,000. So when you add up, that will be 300,000. Move to the next line. I will go back to the question. Am I given direct expenses? There is no direct expenses, but I can see factory variable overhead. So let's go and account for that. Factory variable overhead. How much is it? The factory variable overhead is 140% on direct wages. So 140% on direct wages, that would be 1.4. Direct wages is 210 for Lagos. So 1.4 multiplied by 210. Okay. 1.4 multiplied by 210 equal, that's 294. 294. Again, 1.4 multiplied by 60. 1.4 multiplied by 60 equal 84. 1.4 multiplied by 30 equal 42. 1.4 multiplied by 300 equal 420. So I'm done with that. Then I will then move on to the next one. Any other variable, any other relevant costs? We are told that we also have factory fixed overhead, 400,000 naira per annum. That factory fixed overhead is not part of relevant cost. Okay, it's not part of relevant cost. You only consider the factory fixed overhead when you want to determine profits. But in the determination of relevant cost, factory fixed overhead is not relevant. So move to the next one. The cost of selling and distribution incurred by the depot are estimated as follows. So selling and distribution expenses is a relevant cost, you have to consider it, because if you don't incur selling and distribution expenses, there's no way you'll be able to make sales. So you need to consider that. So for Lagos, we have fixed selling expenses. Lagos is 80,000, Benin 50,000, Kaduna 30,000. So let's account for that. Fixed selling and distribution expenses. Lagos is 80,000. Benin is 50,000. Kaduna is 30,000. Total is 160,000. Okay. Next item. Variable selling expenses. Lagos 5% of sales. Benin 8% of sales. Kaduna 10% of sales. So let's go and do working for that. So let's put our working, this one. Then, okay, let me just put the working here so that to be closer to the main solution. So working for variable selling and distribution expenses. We are told that Lagos is equal to 8% of sales. Total sales in Lagos is 1,400, 1.4. In Benin, 10%. Let me confirm. Benin is 8%, Kaduna 10% of sales value. Benin is 8, Lagos is 5. Then sales in Benin is 400. Kaduna, 10% of 200. Here is 20. Here is 32. 5% of 1,400. 14 multiplied by 0.5. That's 70. Total 122. That's total variable selling expenses. So let us go and post. I will then go up there. Variable selling and distribution. Working number 1. Lagos 70. Benin 32. Kaduna 20. Total is 122. Okay. Go back to the question. What else? From the budgets for the business prepared from these figures, management is considering the desirability of closing the depots and selling organizations in Benin and Kaduna. If this is done, it is expected that all sales in these areas will be lost, but that sales in Lagos will remain unaffected. So management is thinking of closing down Benin and Kaduna depot. So at this point, I need to determine my contribution. My contribution represents the difference between sales value and the relevant cost of making each of the depots. Okay, so let's determine. Please, let's pick it one by one. I will do for Lagos. Somebody should give me for Benin, Kaduna, and Lagos. So on the total. I'm waiting for your numbers. So I will do for Lagos 14 minus 336 minus 210 minus 294 minus 80, 150. minus 150. So Lagos is 410. Yes, who is giving me number?
Benin is 78.
Benin is 78. Thank you.
Kaduna is 30.
Kaduna is 30.
Yes, total is 518.
518. Thank you very much. So this is contribution. Now, after contribution, you need to less period cost, fixed cost. So I would then say fixed cost. Examiner call it fixed production or fixed the 400,000 factory fixed overhead. So I would say factory fixed overhead. That would be our working number 2. So let's go and work it out. Your factory fixed overhead is 400,000 naira for Benin. For the entire organization, the factory fixed overhead of 400,000 naira is for the entire organization. So you need to distribute it across the depots. All right. You are going to look at a variable that unites all the segments together, especially if you are not given the basis of apportioning the fixed overhead. You have to use the unit sold or the sales value. You have to use the unit sold or sales value. But in this organization, and in this question, examiner has told us that, I want to be factual. You are told that, yes, it is estimated that from the first paragraph, you are told it is estimated that during the coming year, 100,000 units will be manufactured and sold at a price of 20 naira per unit. So the unit produced and sold is what unite or what is common to the 3 depots. So that will be the basis of your allocating the 400,000 factory fixed overhead. Therefore, I will then go and do my working. Working number 2. Factory fixed overhead. The total factory fixed overhead is 400,000. That's what you want to distribute. You want to apportion it. Therefore, I would then say distribution. So, like I said, you are going to look for something that is common to all the depots. What is common in this question is number of units. Therefore, for Lagos, we are going to make sales. We are going to sell 70,000 units. So I would then say 70,000 units divided by 100,000 units multiplied by the factory overhead that you want to distribute, 400,000. For Benin, we are going to sell 20,000 units. You divide it with the entire 100,000 units. You multiply with the factory overhead, fixed overhead. Again, for Kaduna, we are going to sell 10,000 units. You divide with total unit of 100. You multiply with 400,000. So what do you get? Well, 70% of 400, that's 280. 20% of 400 will give us 80. 10% of 400 will give us 40. Okay? When you add everything together, it must give you the entire 400. Okay? Total factory fixed overhead, 400,000. So we have apportioned the factory fixed overhead. Let us go and post. 280 less 280 Let me write that. Less, what do we have for Benin is 80, then 40. 80, 40, 400. So let's determine our profit or loss. So 410 minus 280 will give me 130. 78 minus 80 will give me minus 2. 30 minus 40 will give me minus 10. 518 minus 400, 118. This represents net profit or loss. So, in the requirements, examiner is asking us to indicate why management is thinking of closing Benin and Kaduna depot. Remember in my explanation to you, when I was explaining under deleting of a segment, I said the only reason that we make management to be contemplating of closing a segment is if that segment is operating at a loss. So you can see in this question, the management of Ife-Sinachi is thinking of closing Benin and Kaduna depot because Benin is generating loss of 2,000 naira, Kaduna loss of 10,000 naira. So we are done with requirement A. Let's move to requirement number B. Before we move to requirement number B, let me know if you have any question for me.
Yes, sir.
Just talk to me.
Yes, it just the workings for factory overhead.
Yes.
Is it a more that we must use the unit? Because
Yes.
if you still use value, you still arrive at the same answer. So I just want to know.
Yes, you can use any basis that is common, but especially if in the question examiner did not tell you how you are going to apportion the factory fixed overhead. But because in this question, what unites all the depots? What unites all the depots is, please mute yourself. Mute yourself. In this question, what unites all the depots, Lagos, Benin, and Kaduna, is 100,000 units. So, and that's why we use the number of units sold as the basis for allocating the factory fixed overhead. But if examiner is specific by telling you how you should apportion it, then use whatever examiner has told you. Or again, if in the question you are not told the basis at all, then you have to use your, in case you don't have the number of units, then you use your sales value to do your apportionment. All right? Okay, so let's move to requirement number B. We are asked to redraft the statement prepared above using contribution margin approach. So examiner wants us to use contribution margin approach. So what that simply means is that you are only going to, for each of the depots, you're only going to consider the contribution margin. You're only going to consider the contribution margin. So you won't determine profits or loss for each of the depots. So you stop at contribution margin for each of the depots. Remember when I was explaining that under deleting of a segment, when you are carrying out the economic analysis, you are supposed to compare the sales value with the relevant cost of making the segment, whether it will result into positive or negative contribution using contribution margin approach. So in this question, examiner wants you to use contribution margin approach to redraft the statement. So if that is the case, let's quickly do it. All right. So I would then say number B, contribution margin approach. Again, I have Lagos, Benin, Kaduna, and the total for the entire organization. Our figures are in thousands, thousand naira. Okay. The first, we have done this before, so we're just going to be picking from the above. Lagos is 1,400. Benin is 400, 200, 2,000. Then I have my relevant cost. Direct material for Lagos is 336. Okay. For 96.48 for Benin. 96.48. Okay. That's 480. Then, of course, I also have direct wages, 210, 60, 30. Direct wages, $210, 60, and then 30, 300. Again, we have factory variable overhead. Factory variable overhead, 294. Uh, 284, 42. Then 420. Next item, you should be calling the number for me. Fixed selling and distribution. Fixed selling and distribution. 80, 50, 30. That's 160 total. Then we have variable selling and distribution. The variable selling and distribution is 70, 32, 20. That's 122. Then after that, any other relevant costs? No. Okay. So I will then total. Here is 410. Here is 130. No, 410, 78, 30. 78, 30. That's 518. So this represents contribution margin. This is what the examiner wants you to do. So at this point, because we are using contribution margin approach, we are going to stop for each of the depot. We stop at contribution for each of the depot. However, for the organization as a whole, you need to compute the net profit for the company. I would then say factory fixed. Is it factory fixed overhead? Yeah, the 400,000. Yeah, factory fixed overhead, 400,000. So it is the entire organization that will bear the 400,000 naira. So I will then come here 400,000. 400,000 minus 518 will give me the same amount as 118,000. This represents the net profits. So using contribution margin approach, this is what you are supposed to do. Whenever you are asked to use contribution margin approach, you have to stop at contribution for the segment. Your focus will be on contribution for the segment. Okay? So that's for that. Then number C. Now, number C, examiner is asking you to prepare a statement using the historical approach to show the net profit of the organization after closing down the two depots, that is Benin and Kaduna. So you want to know what will be the impacts on the organization as a whole if Benin and Kaduna are closed down. That's what the examiner is asking in this number C, that you should prepare a statement after closing down Benin and Kaduna. So let's quickly do that. Number C. If Benin and Kaduna depots are closed down, only Lagos will subsist. The implication of this is that only Lagos will bear the entire factory fixed overhead of 400,000 naira. This is shown in the calculation below. This is shown in the table below. Right. So now that you are closing down Benin and Kaduna depots, so we need to prepare our income statement to that effect. Okay. Examiner is saying you should use historical approach. There's nothing like historical approach. It's just a grammar. Whether it is historical approach, income statements, or operating statements or budget statement is the same thing. But again, examiner says you use historical approach. So I would just say historical statements. Historical statements for Lagos. Or you can say historical statements after closing down of Benin and Kaduna. So for Lagos, we have sales of 1,400. Relevant costs for Lagos, direct material is 336. Direct wages 4, direct wages 210. 210. Factory overhead. Factory variable overhead. 294. We also have fixed selling and distribution expenses 80. Fixed selling and distribution 80. Variable selling and distribution. Variable selling and distribution expenses 70. Add up 410. 410 minus, sorry, not 410. This should be 990. 990 minus 14 will give me 410. This represents the contribution, total contribution margin for Lagos. Then, since we have closed down Benin and Kaduna Depot, the entire 400,000 factory fixed overhead will be borne by Lagos. So I would then say factory fixed overhead. $400,000. The difference is 10,000. This represents net profit. Okay, so that's what the examiner wants us to do in that number C requirements. And then that's what we have done. Let's go back to the question. So the next thing we need to do now, we are asked to advise whether the management should advise the management based on the income statement prepared above. Okay, so let's advise. Number, of course, I would then say advice. Let me move to the next page. Currently, the total net profits of Ifesinachi Limited is 118,000 naira. If Bini and Kaduna depots are closed down, the organizations the company total or the company overall, net profits will drop to 10,000 naira. This means that the loss of 108,000. That is 118 minus 10,000 naira represents the positive contribution, or represent the contribution margin. Represent the contribution margin of Benin and Kaduna Depot. Therefore, the company should not close down Benin and Kaduna Depot, since they are contributing positively towards the recovery. Let me write that, please. Towards the recovery of the company's general fixed overhead of 400,000 naira and net profits. That's it. That's the end of the question. That's the end of the question. So, please let me know if you have any question for me or any concern on the question we just solved. If not, we move to another area, which is make or buy. Now, you are going to have an assignment for me. Okay? I will need you to solve illustration number 3. Today is Monday. Now you submit not later than Friday, which is the 16th of February. All right? So submit on Friday, 15th of February. Go and solve illustration number 3, Cash and Pick Limited. All right? So once you submit, then I will provide you, I will review your solution, and then I will make my comments. If possible, I will provide you the solution for you. So go and solve Cash and Pick Limited question, illustration number 3. It's very straightforward, but it's important for you to have an attempt of that question. Okay? Please let me know if you have any question for me. If not, we'll move to make or buy decision. Let me see those of you that are still online. Abiodun, are you still there?
I'm there, sir.
Okay. Pascal, are you still online?
Yes, yes, sir.
Okay, that's good. Florence, are you there?
This is Emmanuel. This is Emmanuel.
Okay. Emmanuel, are you the one using a Florence?
Yes, sir.
Okay, I understand. All right then. Anthony, are you still on?
Yes, I'm all right, sir.
Okay, that's good. Dorcas, what about you? Hello, Dorcas. Elizabeth, are you on?
Yes, sir.
Okay, that's good. Imam, I've not heard from you today. Imam, are you on? Oh, okay, you raise your hand. Okay, that's fine.
Yeah.
Okay, that's good. Esther, are you still available?
Yes, sir.
Okay, so I want to believe every other person, and Grace, Osana, Emeka, Victor, Samuel, Ari, Victor, Julius, all of you are still on, so no worries. So let's continue, please. So let's talk about make or buy decisions. Let me stop sharing this. So let's talk about make or buy decisions. Let me know if you can see my screen. Yes, email. Do you want to say, oh, it's still the same hand you raised the other time. No problem. So let's talk about make or buy decision. Before you write down anything, you need to understand that when it comes to make or buy a decision, generally what the company is trying to achieve is to save costs. The company is just trying to save costs. That's why the management is contemplating on whether to make or to buy the components. Okay. However, what is important is that when it comes to make or buy decision, there are some factors that the company will need to consider, which are very vital. Whether you want to make it, whether you want to make the component internally, or you want to contract it to an outside supplier, there are some qualitative factors that need to be taken. Like I said, generally, the make or buy decision is designed principally to save costs and also to ensure that a reliable supplier is available to satisfy the company's requirements. That's the essence of make or buy. I repeat, the purpose of make or buy is to save costs and to ensure that a reliable supplier is available to satisfy the company's requirements. So let's go to the main discussion under make or buy for the next 30 minutes. What do you understand by make or buy decision? What do you understand by make or buy decision? Let's put down a short note. Often in an organization, management may want to know whether a particular raw material, sub-assembly, or components required to produce the company's final products should be manufactured internally or contracted to an outside supplier. I repeat, often in an organization, management may want to know whether a particular raw material, sub-assembly, or components required to produce the company's final products should be manufactured internally or contracted to an outside supplier. Usually, the decision of this nature can be critical and strategic because of the need to protect the proprietary information or the degree of secrecy underlying the company's product. I repeat, usually, the decision of this nature can be critical and strategic because of the need to protect the proprietary information or the degree of secrecy underlying the company's products. Let's continue. This is essential. This is essential especially in a business environment where competition is highly stiff. I repeat, this is essential, especially in a business environment where competition is highly stiff. You know, when you are operating in a business environment where the competition level is very high, you need to ensure, you need to protect the degree of secrecy underlying your products. Because if your competitor gets to know about your proprietary information, the company may be out of the business. And that's why you have to ensure that is protected jealously. You are right in place. It is important that management understand its priorities. It is important that management understand its priorities. For this purpose, a business decision will need to be made on whether the company has the requisite resources, including the technical know-how, to produce the components internally, or whether it should be outsourced so that management can focus on the issues that are critical to the business success. I repeat, it is important that management understand its priorities. A business decision will need to be made on whether the company has the requisite resources, including the technical know-how to produce the components in-house or internally, or whether it should be outsourced so that management can focus on the issues that are critical to the business success. Now, under make or buy decision, the most important thing to do is to analyze the component to be manufactured. Using the economic and qualitative angles of the decision. I repeat, under make or buy decision, the most important thing to do is to analyze the component to be manufactured, considering the economic and qualitative angles. Considering the economic and qualitative angles of the decision that is to be taken. So let's talk about the economic angle of make or buy. You're writing economic angle of make or buy. Subheading economic angle. Now, when you want to analyze the economic perspective of make or buy, don't write, I'm just explaining. When you want to analyze the economic perspective of make or buy, what you need to do is to compare suppliers' quotation. You go to the question, go and look for suppliers' quotation. You compare it with the relevant cost of making the components, whether it will result in saving or deficit to the organization. That's what you need to do under economic perspective. So you are writing economic perspective. This involves the process of comparing the supplier's quotation with the relevant costs of making the components internally, whether it will result into economic saving or deficit to the organization. Economic angle involves the process of comparing the supplier's quotation with the relevant cost of making the components internally, whether deficit to the organization. The format below can be used to prepare saving or deficit from making the components. The format below can be used for preparing saving or deficit from making the components. So, like I said, when you want to determine the economic perspective, you want to carry out the economic analysis of make or buy, all you need to do is to relevant cost of making the components, saving or deficit to the organization. So when you want to determine your savings or deficits, all you need to do is to compare the supplier's quotation with the relevant cost of making include the direct material, direct labor, direct expenses, variable part of production. In case you have opportunity costs, you have to include it as part of relevant costs. It is also possible you may have direct, incremental, attributable, or specific fixed costs. They are all relevant. So you also include it. At the end of the day, you sum up all your relevant costs. You compare your relevant costs with the supplier's quotation. So you are going to have either a saving or deficit. So that's what you need to do under make or buy. So let's go to the decision rule. Let's talk about decision rule. Now, when you want to make a decision under make or buy, if the supplier's quotation is greater than the relevant cost of making the components, your decision should be to make. 2, if supplier's quotation is less than the relevant cost of making the components, your decision should be to buy the components. Number 3, under the decision rule, if supplier's quotation is equal to relevant cost of making the components, you have the option of either making the components or buying the components, depending on other qualitative factors. I repeat, where supplier's quotation equal relevant cost of making the components, the company has an option to either make or buy the components, depending on other qualitative factors. So this will now take us to the qualitative factors under make or buy. Qualitative factors under make or buy. You are writing. The following are some of the qualitative factors to be considered in addition to the economic consideration given above. I repeat, the following are some of the qualitative factors to be considered in addition to the economic consideration given above. Number A, or number 1. Number 1, see, there are some certain questions. When you want to state your qualitative factors under make or buy, there are 2 ways you are going to do that. There are 2 ways you are going to do it. 1, you are going to look at the perspective of the company. If the company wants to make the components internally, what are the factors that the company needs to consider? 2, you also need to consider the perspective of the supplier. If you want to buy the component from outside supplier, what are the factors you need to consider? You match the 2 together, that will give you some high level of qualitative factors that you need to consider. Now, let's put it down. Number 1, the company will need to ask some questions, need to provide answer to some questions. One critical question that the company must answer is that, number 1, you need to ask, do we have the required manpower to manufacture the components in addition to the existing products? I repeat, do we have the required manpower to manufacture the components in addition to the existing products? Number 2, Do we have a reliable supplier who can deliver according to example? When you have a marker, there are different markers in the market, and there are different design for each marker. So if, say for example, a company is already selling marker in the market, so the company will need to ensure that they have a reliable supplier who can deliver according to the specification, how you want your product to look like. That's your specification. So do we have a reliable supplier who can deliver according to our specification? You need to ask that question. Number 3, can the reliable supplier satisfy the existing capacity level? Can the reliable supplier satisfy the existing capacity level, especially if the component is critical to the normal business operation? Can the reliable supplier satisfy the existing capacity level, especially if the component is critical to the normal business operation? Existing capacity level means that if you say you need 100,000 kg or 100,000 units of that component, your supplier must be able to deliver the required quantity. If you say you need 1 million quantity of that component, your supplier must be able, not that when you say you need 100,000, the supplier will tell you that, please, there are 50,000 or 60,000 quantity available. In the next 1 hour or in the next hours, we are going to bring the balance. That balance may not come in some cases. That balance may not come until the following days or until some days later on, or even a week. And this may disrupt the company's activity. And that's why you need to ensure that you have a reliable supplier who can satisfy the existing capacity level. Okay? Then number 4, you also need to ask the question, if the reliable supplier can offer a long-term arrangement. Can the reliable supplier offer a long-term arrangement? You know, if a company is producing something, you are producing the component previously, you now want to contract it to an outside supplier going forward, you need to ensure that the reliable supplier can offer a long-term arrangement. It's not going to be a one-off thing. Just like, prior to year 2000, prior to year 2000, most companies do recruitment by themselves. But in recent time, most organizations decide to outsource their recruitment activity to an agent or to a consultant that will do it on their behalf, so that they can focus on the critical normal business operations, on something that matters to the business. Management don't want to waste time, in the interviewing people. So they decide to contract it to an outside consultant that will be able to do it on their behalf using their own expertise. Okay, so it is important for the company to confirm that they have a reliable supplier who can offer a long-term arrangement. Let me add one more so that we close it for today. Also, that should be number 4 or 5. Okay. Do we have the requisite technical know-how or expertise to produce the components in-house? I repeat, Do we have the requisite technical know-how or expertise to produce the components in-house? Management may want to know, if you now want to produce that component by yourself, you want to produce the component internally, do you have, as a company, you need to ask yourself, do you have the technical know-how to produce the components? If you have it, good. If not, then you need to contract it to an outside supplier. Finally, number 6. The company will need to consider the need to protect the proprietary information. The company will need to consider the need to protect the proprietary information or the degree of secrecy underlying the company's products. I repeat, the company will need to protect the proprietary information or the degree of secrecy underlying the company's products. So these are the things, these are some of the factors you need to consider in relation to make or buy decision. So you can read more. You can include, are we permitted by law to manufacture the components in addition to the final products? Again, you need to consider the need to maintain better quality control of the components. All right. So these are some of the factors that you need to consider under make or buy decision. And this will be the end of today's class. And until next week again, when we are going to meet for the continuation of this topic. So please let me know. Do you have any question for me, please? Let me know if you have any question for me. Let me stop sharing this. Yeah. Any question for me?